Well, hello everybody, and welcome to the Middle Class Investor this week. It is November 3rd, Saturday, about 4 o'clock, and just taking a look at the markets here. And we had an interesting week, a pretty violent, rally week. After almost a 12% down, we've had we're about I don't know, about halfway back up, not quite halfway back up. So the big question is this the move down? Is this it? And there's no way to know for sure, but we do have, if you shorten this up to like a 60-day chart, that may be too short. let me just do a daily chart, a 6-month chart. We do see what appears to be a 5-wave move, a 1, 2, 3, 4, 5. Now, what we don't know yet is if this is an ABC. It looks a little short to be the full ABC. It looks like it needs to go a little further. So this is maybe A of an ABC. So maybe we get something that looks like this, something like that, and then we get a sell-off. But we clearly have 5 waves down. There's no doubt about that. Let's go back to weekly, and one of the things I want to look at is this bar right here, and this zone that I have labeled here. We've got a bearish candle, and we had we had a gap up. Market gapped up, and then ran up, or ran down first. Or gapped down. I guess it gapped up, ran down, ran up, and then finished up just slightly. And the reason I want to point this candle out is because it's pretty bearish. First of all, it's in between 2 large bearish candles. It ran all the way up to here and then sold off. So this is an area where we would call this a supply zone, where there's a lot of supply on the market. And notice where it coincides with, just beyond this 62% retracement and the underside of this channel here. So the underside of this channel, the 62% retracement. The reason that doesn't say 62 where it's supposed to is because I've inverted this. Let me delete this and redraw it. Let me draw it from this high here down to here. So what you can see is sorry about my dogs there. They're barking at a FedEx person. So what you can see is that this 62% retracement right here coincides with this zone I have here. So, and it coincides with this supply area for stock. So this is what I talk about when I talk about weight of the evidence. So we could next week go down a little bit and then rally up into here, and then look. It's real important to see what it does on the next turn down, because right now we don't have a lower high and a lower low, but if it turns down right here, we'll have a lower high, okay, and then when it crosses this low here, we'll have a lower low, and we'll have the beginning of a downtrend. So I think that's all I want to say. I just wanted to point out this candle because you rarely do you see this in between. Sometimes you'll see this at the top of a move or something, but you don't usually see it at the middle. And this is interesting because clearly I think this is an area where sellers are coming in And if the market does rally back up into here, you're going to see sellers come in on that. All right, let's look at the VIX real quick. VIX pulls down just as we would expect since the market was up, especially toward the end of the week. Let's look at 13-week Treasury. 13-week Treasury is up as so the anticipation of the Fed to raise rates continues. If you look at the 10-year Treasury, I would have thought the 10-year Treasury would have pulled back here a little further. Maybe it made another 4 and a 5, and maybe it's got a little higher to go, but then it pulled back, and we'll see what happens. But more than likely, if the market sells off, yields are going to pull back as the bond market goes up. But sometimes they go in the same direction. We'll just have to wait and see. And let's look at Germany and Japan and all these other countries. Last week we talked about how if it broke out of this channel, that would indicate that the trend was accelerating downward and that this wasn't just a pullback. But as you can see, it got right back above it. So maybe it's still okay. Japan is the same thing. Same thing. It kind of broke out of the downtrend, but then rallied right back up. United Kingdom, same thing. It leaned on this downtrend line, but then got right back above it. So we need to wait and see this come out and really see if this is going to keep going down before we can say whether or not this is topped or whether it's just a deep pullback and one more leg up. All right. Let's look over at let's go to the charts. I clicked on the wrong thing. It's interesting. Charts. There we go. Got it that time. And let's look at gold. Gold appears to have turned up, but it's it was real choppy and then broke out of this. And I think gold could get up here to this 1320, 1300 area. I don't know. Gold and silver have been pretty tricky. I don't know if it would get all the way up to here. It might, it might not. I mean, I don't know. I'm a little bit. I don't feel good about gold right here. I mean, I think long is good. Long is better than short. But I don't know that you're going to get a move all the way up to here. That may be a little far. Because gold might be in some sort of... The only reason I say that is because it looks like kind of, like it wanted to kind of create a triangle here. And it may still be trying to do that. Maybe it's a kind of a what's called a running triangle, or, where it kind of runs to the same highs but higher lows and then breaks down. We'll see. Silver's not any clearer. Oil, oil's finally sharply selling off. This one went much further than I thought originally, which kind of leads me to believe that we're probably in some sort of sideways consolidation there with oil as well. Euro US dollar, I mean, all these markets are a little bit confusing right now, but it seems to me the euro wants to go up into this area before it rolls over and goes lower. Of course, I could be dead wrong about that. It could just start going lower right here. But there's a lot of chop here in the middle of this run down. So it seems to me that it could go up a little higher. This retracement wasn't very significant, so maybe it goes up a little higher before it rolls down. One thing I want to show you this week is the trend, which is it's kind of like a bullish, bearish monitor. It looks at overbought, oversold conditions. And what it's looking at is on the New York Stock Exchange, we had this sell-off here, which I mentioned before was about 12%. Now this one was about 15%, but you can see how far it went. It went from there to there. This one was about 12%, and it only went from there to there. So we had almost no bearishness pick up with this move down, which which could mean that there's more to go. I mean, we could get, like I said, get something like this, and then we have a really sharp sell-off to the downside to really drag this trend indicator down. My point in bringing that up again is, you know, the market still appears to be very overbought, even though we've had a huge sell-off. So I think that's an important weight of the evidence thing to be looking at. All right, I'm going to cut it short right there. I think next week we'll let a few more cards come out of the deck, and we'll have some idea about what's going on. But let's cut it off right there. And you know, look, don't forget about the psychology of all this and how difficult it gets. And you're going to want to share, you know, these videos with your friends and family, you know, to keep them out of trouble. I mean, you don't want your friends and family to lose money and be depressed and all that stuff. So, not that I'll have all the answers for them, but when they don't have any answers and they're trying to figure out what to do, it's good to go somewhere other than CNBC. I think CNBC is just going to tell you to buy the dip, buy the dip, buy the dip. Well, look, most middle-class investors are fully invested. So what are you going to buy the dip with? You know, I mean, everything went down. I mean, unless you've only got, you know, let's say 2/3 of your money invested and the other third is in money markets, you don't have anything to buy the dip with. So just keep that in mind. Buy the dip, you know, doesn't really mean a lot unless you have spare cash to buy the dip with. So anyway, all right, everybody. Well, have a great week. We'll see what happens in the election next week. Maybe something happens in the market as a result of the election. Of course, when Trump was elected, you know, it moved the market pretty rapidly. So who knows? We could have something like that again. All right. Thanks for coming in, everybody. We'll talk to you next week. Bye-bye.